right. Well, thanks everybody for coming. We are here for cryptocurrency blockchain 101. We are focusing on um, Bitcoin for this. So the idea is basically in the news a ton, right? There's a lot of people talking about it, and I know a lot of people don't know very much about how it works, what it means, what it does. So I just wanted to give folks an opportunity to learn a little bit more. Uh, My disclaimer is that I am not a financial advisor or anything of the such. So this is not financial advice or investment advice or anything like that. You guys know the deal. Right. So, how do we send money? Uh, in the past, we've sent money through a trusted third party. So let's think about PayPal, where I can go online and send somebody money over the internet. Western Union, where I go to a brick and mortar place, I tell them who the money needs to go to. They take the money, and that person can pick it up on the other end, or like through a bank wire, right? Like or a check. Even if we want to go, I can send somebody a check in the mail or give it to them, and they can get the money that way. But all of these systems involve me sending you money through somebody else, right? There's a trusted third party that is uh, the caretaker of the money in those in between stages, right? Between it coming from me and getting to you. So that leads us to Bitcoin. So the Bitcoin white paper, which was a technical document written to explain what the point of Bitcoin is, and they talk about two parties transacting directly with each other without the need for a trusted third party, right? So how can we remove that central entity and still be able to transfer money from one person to another? So the idea of a cryptocurrency the idea of a cryptocurrency is a digital currency that can be used to buy goods and services, and it uses an online ledger with cryptography to secure online transactions. The words underlined here, I'm going to go over in the next slides. So if you don't know what an online ledger is, or you're not sure about what cryptography is, then you don't need to worry. But for the folks who just joined, I was talking about how in the past, when we've sent money from one person to another, that money is sent through a third party, right? And so the idea of cryptocurrency, one of the main points of it, is to be able to send money without a third party being in the middle of it. All right. Come on. All right. So, what's an online ledger? So, today, the online ledger we're going to be talking about is blockchain. There's a bunch of different types of online ledgers, but blockchain is the technology that is central to Bitcoin, right? And what online ledger is, it's essentially an unchangeable, centrally located notebook. So if you could imagine that there's an imaginary notebook that all of the people on this call have access to, we can all write in that notebook, and but none of the other members can change that notebook once it's written in. So if Maddie writes something in it in Oakland, then I can read what Maddie wrote, but Amy, you can't change Maddie's entry to that notebook, right? And so that's what an online ledger is. Uh, Cryptography is the idea that we can communicate securely without the presence of a third party. So if you think about World War II and what's the machines? There's that movie about the guy who cracks the code of the German secret communication machines. That was cryptography, right? It's sending secret messages so that other people can't get them. And currently, we have apps that like Signal that became pretty popular over the last 4 years, where uh, if I want to communicate with somebody securely, I can do that via an app. We both have a private key and a public key, which allows us to talk to one another without anybody else being able to get the messages. So if you put those two things together, you get uh, blockchain. It's the idea of having the online ledger with cryptography. Alan, I'm going to mute you for right now. Um, so it's the idea that you have. the online ledger combined with the cryptography so that it's safe from anybody being able to change it. So each block has data in it, and uh, each block has instructions on the block previous, how to access the block previous to it. So if you think about our imaginary notebook, the first page has whatever Maddie's message was in it, right? And then let's say Amy wants to add a page. Amy adds a page with whatever data that she wants to put in it, and then she puts a giant arrow back to Maddie's block, right? And then Ingrid, she wants to add more data to it. So she writes a third page with information and points to Maddie's block, which points to Amy's block. So you have a unbreakable link of information that is not stored in any one place, and it is accessible by everybody. In our case, for blockchain and Bitcoin, it's validated by the network. So that process is really complicated and way more than a 101. But each transaction that takes place, the network agrees that that transaction has been processed, and then the next block is added. So we kind of have two examples up here. One is on the one on the left, the basic one. Obviously, is really super simple. It's the blocks that are linked together, and the one on the right is the more advanced one. The hash is what's pointing to the previous block and telling folks, making sure that folks know that the transactions are secure and in the order that we think they came in. And what this does is it eliminates the need for a third party. So instead of having to send that notebook from Maddie's house to Amy's house to Ingrid's house through the USPS, we can do it on the internet using our computers so that we don't ever have to trust anybody else with our ledger. So here's some cryptocurrencies. This is as of this afternoon at 1, and it changes pretty rapidly in terms of the top 5. When I originally made this slide on the 4th, this Bitcoin and Ethereum are still the same, but the bottom 3 were different. So it's a space that's moving super rapidly. The market cap is the number of coins in circulation times the price of each coin. So it's like how much is this cryptocurrency worth in total. Bitcoin is far and away the leader in market cap, and then kind of the other spots recently have been moving around. Other notable coins that you may or may not have heard of, Dogecoin, which has been in the news a lot lately because of Elon Musk, the owner of Tesla, and because it was part of the whole Wall Street Bets Reddit pump and dump scheme, for lack of a better term. Other notable coin is Litecoin. So if you ask folks in cryptocurrency what are the big 3, folks are typically talking about Bitcoin, Ethereum, and Litecoin. Today we're talking about Bitcoin, and the other 2 have every cryptocurrency has specific things that it was designed to do, and so Bitcoin was invented in 2008 by an unknown person or group of people using the moniker Satoshi Nakamoto. It's still unclear as to who created it. The person has basically person or group of people has chosen to stay anonymous. And it started being used in 2009. There is a finite limit of supply of 21 million Bitcoin, so that you cannot get more Bitcoin after those 21 million are minted. And it's open source. So its design is public. All of the code is public. No individual owns or controls Bitcoin. And hypothetically, anybody with an internet connection can take part. So back to what we were talking about originally, in terms of how do we pay for things. Bitcoin was originally created for online payments. If you're familiar with the Silk Road, it was a dark web marketplace that was famous for selling basically anything that you could possibly think of, but most specifically drugs. Back in the early 2010s, I want to say. Bitcoin was used on that platform for a lot of the transactions, and so at the beginning, Bitcoin kind of got a bad name because the technology itself is agnostic, right? It doesn't really care who uses it. But its first primary use was for illegal and illicit activity on Silk Road. So if you hear a lot of like our senators and Congress people who aren't really technical people and they talk about Bitcoin, like folks still have this kind of outdated idea that Bitcoin is exclusively used for to sell drugs when that's not really the case anymore. Over time, Bitcoin has become a store of value. Some people call it digital gold, and part of that is because there's a fixed supply, right? So some people believe that Bitcoin will help protect them from inflation, right? As we know, the U.S. government can print as much money as it wants, which necessarily causes inflation. So the bill that was just passed in Congress yesterday for the COVID relief bill is creating money that doesn't currently exist in order to be able to send it out to people, right? And some people believe that in the long term, that's bad for our society. So some people have chosen to store their money in Bitcoin with the belief that it's going to keep its value better than the United States dollar, essentially. And inflation is the idea that your money's worth less today or less tomorrow than it is today. So the Bitcoin price over time. So I made the slide deck, like I said, on 2/24. So and I on the next slide I have the chart as of today. But as you can see, generally the price in November of 2013 was 832. Today, last time I checked, it was like 45, 46,000. This was less than a month ago, and the price had topped out around 40,000 and had dropped a little bit. And then today, when I looked at it, you can see the price almost hit 60,000, and then we're kind of on a little dip right now. That's been happening over the last couple of days. But generally, as you can see, there is volatility, right? So you see it went up to 20,000 and it went back down to like 5. It went up to 12 and it went back down to 5. Right now, it went up to 58, I think, and now it's back at like 45. So in the long term, in the short term rather, there's definitely a lot of volatility, just like any market, whether it's the stock market, currency markets, whatever you might invest in. But generally, as we can see, the trend over time thus far has been generally going up, right? If I bought Bitcoin pretty much at any point except for the last 2 weeks, it's worth more now than it was when I bought it. So another thing that I wanted to touch on, I made a couple different slide decks for future, but each one of them I wanted to talk on a community, like a part of the Bitcoin and cryptocurrency community. So this one, the idea is, it's called HODL, is how you pronounce it. And it started by this drunk guy who was posting on a forum. At one point, Bitcoin was, at this time, was going up pretty rapidly, and he was wasted and was posting and telling everybody to keep their Bitcoin, and he misspelled hold. And so it kind of caught on, and the idea of hodling is that you're going to keep your Bitcoin or your cryptocurrency and not sell it. So what is Freehold? Freehold is an organization that I'm a part of that essentially pays people to talk about Bitcoin and share information regarding Bitcoin. It's free to join. There's no dues or anything like that, and they pay you in Bitcoin to talk about Bitcoin. The only catch is you have to hold on to it. So that is Freehold, and it's pretty cool organization. I tell people about Bitcoin anyway, so it's like I can get paid $50 to tell people about Bitcoin. This is not being paid for by them, but I just wanted to mention it in general. What are the risks of Bitcoin or cryptocurrency in general? Like any speculative investment, it could fall to zero, right? Like when the stock market crashes, like when it crashed in March, if you had money in the stock market and you were planning on getting it out on March 28th, you were in the bit of a pickle because all of the money that you had put in there that had essentially appreciated over the last however long was now worth way less than it was the day before the business shutdown in America due to the coronavirus. The other thing is you can lose your Bitcoin. So thousands of Bitcoin are lost permanently because people lost their keys. They lost their passwords to the wallets that hold their Bitcoin. So, and there's nobody else that can get it for you. There's no way to unlock it. Like if you lose it, it's gone forever. And that's part of the cryptography part of it, right? I cannot break into your Bitcoin wallet, right? and that's what makes it safe. But that means that you can't break into your Bitcoin wallet if you lose your Bitcoin. So I would say those are the two main risks. Obviously, like any investment, it can go to zero. It can go below what you bought it at, or you could literally lose it just because. I mean, like people lose cash, right? Like whatever, you can lose it, literally and figuratively. Um, this is just general investing suggestions. If you're planning to invest in any cryptocurrency, whether it's Bitcoin, Ethereum, Cardano, Polkadot, whatever it is, there's literally hundreds of them. Please do your research before investing. Pretty much every project has what's called a white paper, which is sometimes technical, sometimes not. Usually the beginning is not technical. So they're describing what the view of that, what's the point of this project? What's its use case? How is it going to be used in the real world? Um, and there's a website that's called CoinGecko, and there's another one that's called CoinMarketCap. Those two websites have a listing of pretty much every cryptocurrency, and it has links to the white papers. So it's a really good website. I prefer CoinGecko. That's just my preference. CoinGecko.com. And you can click on the link that has the white paper for the specific project that you're thinking about investing in, and you can see, okay, what is this going to do? What, like Bitcoin? You saw what I posted in the white paper at the beginning. It's talking about payments, right? Ethereum, which is the second biggest cryptocurrency, the big thing in their white paper was what they call smart contracts. So Ethereum, for example, has the ability to have automated contracts where it's elevating that being able to do something without having a trusted third party, right? So the way that a smart contract works is that I can write the smart contract that if a certain address sends me something, that I send something back. So for example, they use it with tokens. So if Ingrid wants to buy some tokens from me, Ingrid can send me one Ethereum, and I send the smart contract automatically sends back the certain amount of tokens that whatever the exchange rate is. So read the project's white paper. Look to see what folks are saying on Twitter and Reddit. There's really big communities. Some are great, some suck, but generally I've done a lot of research to whittle down the people who I actually pay attention to, because there's a lot of noise, just like on any public forum. But and I have a Twitter list. If anybody's interested, I can send it to you, of the people who I follow and whose opinions that I value. But generally, you'll see a lot of people talking about the benefits, the negatives, what's good about this project, where it's going to go. And then obviously, don't invest more than you're willing to lose. That kind of goes without saying. Because if you lose your keys, or if Bitcoin tomorrow, if the internet ends tomorrow and we can't recover anything, then that money is disappeared, right? So this was just like kind of an idea of things that I would cover in a 102 if people are interested, which is wallets. So how do I store my Bitcoin or cryptocurrency? Exchanges, where do I buy cryptocurrency, or how do I buy cryptocurrency? And then keys. That was the part that I was talking about in terms of that's how I know my wallet's secure. There's passphrases that lock my wallet. So there's like 5 minutes left. Do you guys have any questions about the things that we talked about that I could answer, or things that I didn't talk about that you have questions about? You're on mute, Ingrid. There you go. Yeah. So in the same way that like when you buy a stock, let's say, assuming you have like an IR, 401k or something like that, right? Like they don't send you a they don't send you a paper certificate, right? There's no paper that says Ingrid owns one share of Apple, right? So like it's basic like the stock market's the same way, right? It's like everything's stored digitally, and like there's different exchanges in the same way that like if you're investing in the stock market, right? There's like Fidelity and all these different people that you can use as an intermediary. So just like I can buy a stock from my neighbor, hypothetically, right? I can also buy a stock from a stock exchange, right? And then there's in cryptocurrency, there's a ton of different exchanges. The most popular in the United States right now is called Coinbase, and so you log onto Coinbase, you transfer your money into their account, and then they allow you to access all of these cryptocurrencies to purchase. Through that exchange, right? And until you um, move it off of that exchange into a wallet, technically it's in their possession, right? It's in their responsibility, right? So in the same way, like if you have stocks, um, essentially they're holding that money for you, right? They're holding that money for you, and they tell you how much of each stock you own. But if you want to get it out, you have to sell that stock through them, and then you have to transfer that money to your bank account. Essentially, in just in the same way, if you were buying cryptocurrency on exchange, you would transfer your cash in there. You'd buy your cryptocurrency. You could either leave it on the exchange or transfer it to your own personal wallet. And then when you wanted to sell it, you would transfer it back to the exchange, sell it at the price that you wanted, and then at that point you could transfer your money back to your bank. Absolutely, yeah. As here in the United States, cryptocurrency is subject to the same capital gains taxes as stocks are. So it's like 15 or 20% for long-term gains, provided you make more than like $40,000 a year, and then short-term gains, which is less than a year, is taxed at your income rate. So yeah, it's the same. Mhm. Absolutely. So Coinbase actually, that's Coinbase is the most popular. I wouldn't say it's the best, but Coinbase does charge a fee. If you they have two different platforms. Coinbase is the what I call the retail platform. It's super easy to log in. You can use a credit card, a bank card, or you can link your bank account. Um, but their fees are substantially higher. Then there's Coinbase Pro, which is run by the same people, and the interface is just slightly more complicated. But on Coinbase Pro, they charge 0.5% per transaction as a transaction fee. But on regular Coinbase, the fees are much higher and tend to be in like the several percent range for every transaction that you do. But yeah, any exchange has fees. They vary. There's a bunch of different exchanges: Binance, Coinbase, Gemini. There's literally hundreds of them. Some of them are only available in certain states or not available in certain states. I know New York has pretty strict laws around what exchanges you can use. Hawaii has pretty strict laws as well. But yeah, they all have fees for every transaction, essentially. And then that's how you the fees also. So I didn't really talk about this, but for every transaction that you do, there's a fee, a small fee. So if I'm sending money from myself to Ingrid, and if I'm sending you Bitcoin, then there's going to be a small transaction fee that goes to the Bitcoin network, the people who are validating the transactions. That's part of it. So when I send it to remove it from the exchange and put it in my personal wallet, there's going to be a transaction fee. And then when I put it back on the exchange, there's going to be a transaction fee. And that doesn't go to Coinbase; it goes to the people who are securing the network and verifying those transactions. You own a Bitcoin. So it's like it's something that's been created and the value has been assigned to it, right? So like I'm not investing in a company, essentially investing in this idea, right? And over time, enough people have believed that this idea is worthwhile and that its value is going up. There are companies that have cryptocurrencies like Bitcoin is not a company, right? But there are companies that have been created that have cryptocurrencies that they use to fund their operations. um, so but that's kind of different. Yeah, it's like American dollars and Canadian dollars, right? And Bitcoin, right? Like I can just think of it as an alternate currency that I can use to trade for goods and services, right? So like I'm not the value is not in that it does something outside of just being a currency. In the case of Bitcoin, at least. Sure. Hmm. Yeah, absolutely. I think Ethereum is kind of more of my area of interest anyway. Um, so that's definitely something that I would be interested in doing. Um, but yeah, 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 absolutely. Mr. Kelly was one of our business teachers in high school, so we go way back too. Anybody else have any other questions or anything that doesn't make sense or makes sense or like it's confusing or sure. It just depends on whomever you're purchasing that item for, if they accept Bitcoin as payment or not. So there are tons of retailers that do accept Bitcoin as payment. I personally wouldn't necessarily suggest buying anything with Bitcoin um, because the if you buy something with one Bitcoin today and next year that Bitcoin is worth double than what it was worth today, then you're going to be kind of salty about it. But it happens. People do it. There's other cryptocurrencies that are way more better designed to um, do that type of payments that you're talking about that retailers do accept. So they're definitely and there's companies that have created debit cards that link to your cryptocurrency. So let's say you own um, Bitcoin, you can use it actually swipes just like a credit card. There's a credit card fee, and it takes it off of your Bitcoin balance. And there's a bunch for different cryptocurrencies as well. So it's definitely possible. If it were me, I would rather keep my Bitcoin. Not I mean, if you believe that the price of Bitcoin is going to increase, right? Like based on the chart that I showed you earlier, and let's say you bought Bitcoin in November of 2013, and it was yeah, like let's say you bought one Bitcoin at $832 in November of 2013, right? And in November, sure. Maddie and Mimi invested $500 in Bitcoin in 2017 because I suggested it. And Maddie was like, "What is this fake internet money? Like, this is crazy." Like, totally roasted me, like, asked me a gajillion questions about blockchain and explained it all. And, like, at the time, they were like, "Fine, well, we have $500 that we can literally throw away. And so buy us some cryptocurrency and we'll see what happens." And I'm gonna just check on it right now because it's funnier that way. Um, so right now, that $500 that they invested in 2013 is worth $14,873. Um, so if they had bought something with Bitcoin in a couple months later, then sure they might have like a great $500 something, right? But the time value of that money has increased, right? So the price, if you think that the price of Bitcoin is generally going to go up in the long term, then you're better off keeping it until you want to cash out than you are to using it as a method of exchange in daily life. Well, well, hmm I mean, it's just like anything, right? Like there's buyers and sellers, and there's people who have. It's. I mean, if you certain people you ask, it's human psychology, right? So like, why do stocks go up and down in value? Why is Tesla worth $800 plus when it was $300 12 months ago? Did anything principally change that Tesla is doing in terms of making cars or batteries that is different a year ago than now? I mean, a couple of things, right? But like generally, nothing suggests that their stock price should be double or triple what it was from like literally 18 months ago, right? So I mean, it's a assigned value as much as any other stock, right? It's worth however much we think it's worth, and if people think it's going to go up, then they'll buy it at the price that it is currently, and if people feel like they're missing out, then they're going to buy it at the next price, right? Um, but that's more like investment strategy than anything else. Yeah, so like you guys have never fucking heard of Bitcoin, right? Or maybe you've heard of it, but you've never purchased any, right? Like Maddie has by accident, and right. So like I was in Ethereum, Greg, in 2017. Like I made a fair amount of money. I was able to buy like a cheap clapped out truck that lasted me for a while, and like it was amazing, right? But like most like what people talk about inside the community is like the retail wave, right? And the idea being that most regular people still they might have heard of Bitcoin, but they don't know how to find it. They don't know how to get one. They don't know what to do with it. They don't know how to keep it, right? And so like Bitcoin's only what like 11 years old? No, 12 years old, right? So like the idea is that it's at the beginning, just like anything, there's price fluctuations. But and I do think personally that over time, over a long period of time, like Bitcoin will really flatten out and be subject to less um, price movement, volatility. But I mean, there's crazy volatility in the stock market too, right? Like in March, as we all saw, like everything was cherry for the last 4 years in terms of the stock market going up, and then the coronavirus hit and the stock market took a dump. So um, that's kind of my opinion. Yeah, Amy, do you have anything? Hmm. Yeah. So when I was talking about like the transactions being secured, that's where the mining comes in. So it's not like we're not digging for people who don't know what mining is. We're not digging for gold. We're processing mathematical problems, right? And so by those computers that's in your neighbor's garage are doing math problems essentially at a super fast rate. And when they get the correct answer to one of those math problems, they get the right to process the next set of transactions on Bitcoin. And so by processing that transaction, they get paid because we talked about the fees from sending from one person to another. They process the transact. They win the mathematical race. They process that transaction. They get the fee, right? So over time, And now, like it used to be, you could have a little setup in your garage that would be profitable mining Bitcoin. Now there's like warehouses full of computers that are processing these transactions in bulk, because another feature of Bitcoin is that the what they call the mining rewards. So the part of the cost that goes to the miners decreases by half every 4 years. So that's like kind of 203 Bitcoin, is that the mining rewards decrease in half approximately every 4 years. And that's, some people believe that's part of the reason why approximately every 4 years the price goes up significantly, because it changes the reward structure for people who are mining Bitcoin. And at that point, oftentimes people who have been mining for a period of time start to sell and cash in to make money to support their operations. But so he's securing the transactions of the blockchain network, right? So even if he doesn't win the race to for this specific block, he can help verify all the transactions that are taking place, right? And all of those computers being on and processing these transactions are what helps secure the network. So yeah. Anybody else? Awesome. Well, thanks for joining. I hope you guys learned something, and uh, yeah, if you guys have any questions, please feel free to shoot me a message or whatever, and I'll feel free to talk about it more offline. If you are interested, like Greg had mentioned, I can do one about Ethereum. I have another presentation that's already made about wallets, like I said, wallets, exchanges, and keys. So if folks are interested on like kind of like more specifics of how you would buy or sell a cryptocurrency and how you could store it, that's something that I can do as well. So, yep. Sounds good. We'll set something up. Probably this next weekend. On Saturday, we'll be home. All right. Ciao. Love you. Yeah, I'll call you. All right. Yeah, no worries. You're welcome. Yeah, good to see you, Adam. We'll be in touch, man. Yes, sir. Guaranteed, dude. Hopefully fucking soon. I'm tired of this shit. All right, later, buddy. Yeah, absolutely, Amy. Good to see you too, and hopefully that made it make a little bit more sense as to what's going on. No, I don't know. Guaranteed. And the thing is, it's like in my like I have a fair amount of money invested in this shit, but for the average person, it's like, okay, what are all the things that I waste money on, right? Like that aren't necessities, right? And if like, okay, if I put $5 and I lose it, then like whatever, I lost $5, but like I can learn and fuck up in the process, right? Um, and get a new skill, basically. Yeah. Sounds good. I'll be in touch. I'll post something or I'll send you a message on Instagram. All right. Sounds good. Bye. Yeah, no worries, dude. And I'll hit you up. I'll tag you when I set up for an Ethereum one. Uh huh. Right. Yeah. Yeah, I mean, I'm really big on Ethereum personally. Like that was what really got me into the space in the beginning, back in 2017. Um, and yeah, there's also some other really cool projects that are in the pipeline that are like less well known that I'm really excited about as well. But I think in terms of like Ethereum has a great project. It's already there. It's already doing stuff, right? And so like, um, I think it's a good investment. But absolutely.